there still is the, in the first part here about MD&A, the client is still supposed to write the MD&A and then the auditor evaluate it. I mean, that's what we've been doing since DIRT was invented, is client prepares a set of books and hands them to us, and we have to decide if that set of books represents, you know, something close to economic reality. I mean, I see no difference between the client taking a stab at MD&A and, quote, taking a stab at generating a general ledger and trial balance and handing it to me. I don't see any difference. The point about client preparing the balance sheet, income statement, and cash flow, that's not the requirement. Okay? The requirement is, can they, with their skills, knowledge, and experience, become a safeguard for that process of financial statement preparation when they, in fact, ask us to do it for them. If they have the skills to do it, that's fine. They can farm it out to us, just as long as we document that there were skills, knowledge, and experience available. So I'll let then, Chad, you can pick up from there.
I would just say everything that I would agree with what you said, is that the MD&A has management discussion and analysis, and management should be preparing that. And they're probably the best to prepare that too, because they're going to know why certain numbers change when you have to disclose. You know, when you write in that part, you talk about why was there an increase in revenues or expenses, and have that discussion. As the auditor, you're probably not going to know that detail. It's much better if they write it and you review that area and see, make sure it makes sense.
Now, a lot of the MD&A, remember, is the comparison of, you know, of the periods involved, and coming up with, you know, either dollar changes or percent changes, and displaying that in some format, you know, pie charts, graphical representations, you know. But the thing that we don't know is why. You know, I don't know the reason why these things have changed. I wasn't there when all this happened. So to expect me as the auditor to write, you know, a fantasy novel, you know, I mean, that's ridiculous. And that's where the MD&A breakdown is. You know, I hand it back all the time saying, you didn't explain why and give a valid business reason as to why this expense is up or this expense is down, or why this revenue stream, you know, fell off the planet. You know, I need to know why. And all you ever hear is, well, it's more than last year. You know.
Yeah, I even had that as fee accountant. We had a small client call us from Georgia, and the auditor's here, and he's wanting to know why maintenance materials went up by 40%. I'm going, I don't know. You tell me. You decided to pay more. You decided to buy more.
Ron, Ron, this is all your fault. You baby your clients too much.
They
expect you to divine
anything. But yeah. Okay. All right.
By the way, the SAS on that, I think we were referring back to SAS 112, which really came back to statements, client-prepared documents, and saying started the whole independence issue. But anyway, it's now where it is, and I think it's not as hard as I think Chad made it clear.
I was originally saying you got to have two people. Yeah, I was one of those ones 3 or 4 years ago when it came out and said the room almost divided in half. Half of us said, you got to have an accountant write your financial statements so that we can audit them, and the other half of the room said, no, we can write the financial statements and audit those. I was on that side of the room at that point in time. But I think now with the new independence standards, it shows how you can put safeguards in place that you can write the financial statements with those safeguards and still protect yourself and still have your independence. So I've kind of moved to that side of the room, I guess.
And that was always kind of interesting, because we had several auditors come to us and say, well, we want you to write the financial statements for us as the accountant. And it's like, that's fine. But we want you to use our format exactly. You know, down to the font, down to everything. And it's like, you do know that they can alter a little bit and be a little bit different and still be in compliance with GAAP. Well, yeah, but our peer review said he liked it this way, so that's the way I do it. Okay.
Find a new
why
peer
don't you just
reviewer.
do it your own?
Can I increase your fee? What's your fee? Oh, same font? $500.
I like the way you think.